Quarter after quarter, middle market companies have demonstrated that they are the most dynamic part of the U.S. economy. And they did it again in the second quarter of 2016, racking up impressive gains in revenue, strong growth in employment, and excellent overall performance. 7 years into an economic expansion, it appears as if the U.S. middle market is picking up the pace. I'm Tom Stewart, Executive Director of the National Center for the Middle Market at The Ohio State University's Fisher College of Business. I'm here to present the results of the Middle Market Indicator for the second quarter of 2016. The Middle Market Indicator, the MMI, is a pulse check for companies with revenues between $10 million and $1 billion a year. That group comprises the middle third of the private sector in terms of gross domestic product and employment. About a third of GDP and jobs come from smaller companies, about a third from larger companies, and about a third in the middle. Every quarter, we survey 1,000 of these companies and ask them, how's business? How's their growth? How are their jobs? What are their plans? What's their confidence like? The second quarter data were collected in the first 2 weeks of June 2016, so they're very current. Let's look at middle market growth numbers. They were very strong in the second quarter of 2016. Indeed, top-line revenue growth on a year-on-year basis increased 7.2% for middle market companies, a really strong number and a full percentage point higher than the 6.2% average for the last that we've seen for the last 6 months. Now, 7 years into an economic expansion, you would expect to see the rate of growth flattening out. And we did see that for about a year, but now we seem to be seeing it tick back up. We see good numbers across the board, but they're particularly good in construction and in retail. In construction, 70% of companies reported improved overall performance, and only 2% of the companies said that business deteriorated. In retailing, the numbers were even stronger, with 81% reporting improved overall performance and just 1% saying things got worse. Looking at revenue specifically, services lead the way, averaging 8.3% gains on the top line. Manufacturing grew the least at 6.3%, but those numbers aren't bad. For the economy as a whole, the Business Institute for Supply Management projected 4.1% manufacturing growth. So at 6.3%, the U.S. middle market manufacturers are delivering growth half again as great as that of manufacturers overall. So what levers are companies pulling to drive that growth? It varies by industry, of course. Construction companies are pushing hard into new markets. Manufacturers, rather, as you would expect, are working hard to develop and introduce new products. As a whole, the middle market is holding the line on capital expenditures, but opening its wallet with more spending on sales, marketing, advertising, so on and so forth. So together, these are the efforts that are behind the strong revenue growth that we're seeing in the middle market. Middle market employment growth jumped in the second quarter of 2016. Compared to the quarter before, year-on-year job growth rose from 3.6% to 4.4%. That's an increase of nearly 20%. And it's the second highest rate of job growth we've seen in the 4-year history of the middle market indicator. We're seeing the same pattern with jobs that we saw with revenue, namely a rebound from the numbers that we saw in the last 6 months back to the levels we saw in 2014 and the first half of 2015. Now, it's too early to say that this is real acceleration. We'd want to see a couple of more quarters before we could say that, but it's clear that the expansion has not run out of steam, certainly as it affects the job market. And it's also clear that the middle market continues to play its role as the most important arena in which net new jobs are created, with payroll increases almost twice as great as those in either larger companies or smaller companies. Within the middle market, it's the larger companies, those with revenues between $100 million and $1 billion a year, that are showing the most robust job growth. For this group, payrolls are up 5.9% compared to 4.4% for the middle market as a whole. It's a substantial difference. These companies also anticipate adding jobs faster than their smaller brethren in the middle market. Construction companies and retailers, the same industries that led the way with revenue growth, are also the industries that expect to be hiring the most. Now, this said, the employment picture in the middle market is somewhat concentrated. More than half of companies we surveyed said that they added no net new jobs in the last 12 months, or even reduced headcount. Overall, 72% of companies said that revenue grew, but just 43% said that payroll did, which means a lot of companies were able to raise prices or achieve big gains in labor productivity through automation, economies of scale, or other efficiencies, able to increase revenue without increasing their payrolls. So the middle market job story, to summarize, continues to be a very good one across the board, and certainly in comparison to bigger and larger companies in the economy. With solid gains in revenue, and payrolls, and overall performance, it's not surprising that middle market companies are facing the rest of 2016 with considerable confidence. But as we'll see in a moment, that confidence is also leavened with a dose of caution. Most executives say that the business climate will remain about the same, which is to say, it will remain pretty good. Only 8% expect the business climate to deteriorate, while 19% expect it to improve. So that's a ratio of optimists to pessimists of 2.4 to 1, which is the highest in over a year. Now, that doesn't mean they're ready to open their wallets to commit to major increases in investment. Asked what they would do with an extra dollar, whether they would invest it or keep it as cash, just 62% of middle market companies say they would invest, which is at the low end of the historical scale. Now, what's holding them back? Is it just innate caution? Is it a lack of clear, profitable investment opportunities? A desire to delay investment until some uncertainties are cleared up? It's hard to say. Election year political uncertainty weighs on many middle market executives, though it ranks far below the business challenges of competition, costs, and customers. International economic uncertainty is a stronger concern, especially for companies with significant global exposure. Following the Brexit vote in the UK, in which the British public elected to withdraw from the European Union, we resurveyed 550 middle market executives, and while half of them said Brexit would have no direct effect on their business, half said it would, and about 1 in 8 overall said it would have an extremely significant impact. Specifically, they tell us that they intend to reduce their investment plans in the UK and to some extent in the European Union, and invest more domestically in the United States and to some extent in Asia. This quarter, we also asked a series of questions of middle market executives to gauge how satisfied they are with the services, the rules, and the incentives that they get from governments at the local, state, and federal level. The results are somewhat surprising, and we've created a special report on that topic. Look for it. It's called Middle Market Perspectives on Public Services on our website or at this URL. As they look ahead into an election year, and one with uncertain signals about the cost of capital, the pace of growth, and global conditions, the U.S. middle market emphatically retains its position as the place to be for jobs, growth, and competitiveness in the U.S. Our website, middlemarketcenter.org, posts the entire middle market indicator, the data I've summarized here, the full report, and also the raw data, not just for this middle market indicator, but for every previous middle market indicator. There's no cost. There you will find, in addition to the MMI, lots of other research from the center on such topics as building top teams, sales force effectiveness, globalization, digitization, and other issues. Again, the URL is middlemarketcenter.org. For the National Center for the Middle Market, I'm Tom Stewart.